A new report issued by the Overseas Chinese Affairs Office of the State Council is saying we should expect a slowdown of investment by overseas Chinese. They said the primary reason is because the government will retain the restrictions on the real estate industry. Investments from overseas Chinese grew at the highest pace in the property sector among all industries in the past decade, according to the report published by the Overseas Chinese Affairs Office of the State Council. The mainland drew a record $116 billion in FDI in 2011, of which 20% went to the property sector and mainly came from overseas Chinese. In general, FDI by overseas Chinese continued to grow in the past 7 years and reached a record high in 2011, accounting for 65% of the total foreign direct investment last year. Sun Fei, director of the Chinese Enterprises Overseas Development Center, said the excessive liquidity in the global market in the past years had generated enough cash to invest in the booming mainland property market. The report attributes the high growth of investment by overseas Chinese to several factors: familiarity with the business environment in the mainland, good relationships with local governments, and acute sensitivity to domestic policy adjustments. The investors mainly came from Hong Kong, Taiwan, and Singapore. The report warned that the growth rate of overseas Chinese investment will slow down this year due to policy curbs on the property market. The numbers are already showing the slowdown. In the property sector, FDI fell by 9.3% in the first 7 months of 2012 compared with the same period of 2011. Other reasons for the slowdown were the appreciation of the yuan against the dollar and the rising costs in the manufacturing industry. The National Development and Reform Commission implemented an FDI guideline in January which encourages investments in high-end manufacturing, services, and emerging industries.